You see these little red boxes? They mean the price is going down. I'm going to tell you a little secret about these red boxes. They do not mean a damn thing, okay? Without you, they're like worthless hunks of plastic. Like a loaded M16 without a trained Marine to pull the trigger. And in the case of these things, it's up to each and every one of you, my highly trained coiners, my hodlers who will not sell no matter how much it dips, my damn warriors, who will hold every cent until we see those boxes go to the moon! After an intro like that, I feel I need to put in some pretty strong disclaimers and risk warnings to everyone listening. So here goes. The buying of fiat currencies has been shown to have extreme volatility historically, despite being backed by the law, police, armies. Fiat is still used for an insane amount of money laundering each year and is the primary choice of compensation for other illicit activities. It has an increasingly unfair distribution model, subject to rampant fractional reserve lending. You are liable to be physically robbed of it, you cannot safely wipe with it, and its infrastructure uses a tremendous amount of energy.
Fiat is Fiat is You know what, I just don't feel very comfortable with this. How much are you paying me again? You know what, make it $2. Fiat is collapsing. I am henceforth changing my name from Fiat Daily to Bitcoin Daily. And I advise anyone listening to do their research, to never invest more than they can afford to lose when considering buying of fiat with their crypto. There, how was that? Best $2 you ever spent, right?
No, but seriously, I hate stating the obvious, but whoever needs to hear it, the only thing ever guaranteed you in life is an inevitable death, taxation, Coinbase going down during volatility, and holding crypto being anything but a smooth ride. So who or what do we have to blame for the fact that we have not yet breached all-time highs? But we did breach all-time highs by Bitcoin's market cap. Literally no one cares. How interesting it was this week that almost a coordinated attack occurred precisely when the market was due for a pullback, and all on an illiquid public holiday celebrated by millions, the Killer Turkey Day. The result was, in the grand scheme of things, minor. But it could turn into something more major, but I'm sure the pernicious manipulating forces, if they do exist, would be disappointed their carefully laid plans did not initially spark further panic. After all, if they truly wanted to stop Bitcoin from ever hitting a new all-time high again, they really needed to go for the jugular here.
This is not okay. This needs to stop now. This is cancer.
So what am I talking about specifically? A US and China rhetoric dropping almost simultaneously. And you know it's not a real bull market till we see some China FUD. First up, the US, the little weasel again, Steve Munchkin.
Cryptocurrencies such as Bitcoin have been exploited to support billions of dollars of illicit activity like cyber...
Brian Armstrong of Coinbase himself, not a very beloved man in the space, broke the story preemptively that Steve is trying to last-minute push legislation through, almost as a final act before he leaves his post along with the potential Trump administration, as a farewell gift to us that, if implemented, would cripple Bitcoin's privacy and usability in the US.
It's time to stop. No, this is not okay. It's time to stop. It's time to stop.
It was at this time that I realized Steve was going to be out of a job soon, a fact many are no doubt quite happy about.
Screw you! You're fired! You're fired! Whoa!
Brian says, the proposed regulation would, we think, require financial institutions like Coinbase to verify the recipient/owner of the self-hosted wallet, collecting identifying information on that party before a withdrawal could be sent to that self-hosted wallet. I mean, talk about total overkill.
You there, sir!
I certainly hope you've got a fishing license. Well,
imagine the 12 or so people that would actually comply with this, while everybody else would just stop using US-based exchanges through the use of a VPN or the use of a decentralized Bitcoin exchange like Bisq. While some were spooked at the news of this, Bitcoin dumps as Coinbase CEO mentions potential US regulations for crypto wallets. This really is a piece of non-news. While it's not a good proposal by any stretch, it really should only spook the likes of Brian, who rely on being able to retain his customers. For everybody else, they just move on. And that's one of the beauties of a decentralized network. You try and fight it, and paradoxically perhaps, it just grows stronger as a result. So I think this uninformed piece of legislation, if true, won't go through once they realize it's not going to really have the intended effect.
Stop right there, criminal scum!
Before moving on to what the Chinese are doing, I do want to interject the positive news, I guess, which I do think is having a significant positive impact on price. Tether. My goodness, it is exploding. On August 31st, 3 billion in a day was printed, and since then we've seen the fastest expansion in its history. It's a similar story with other stablecoins. Within the last 30 days, Tether is up 16%, DAI 7%, TUSD up 20%. Overall market cap is much bigger for Tether than anything else, of course, pictured here in purple. It did have a multi-year head start, but honestly, it would be nice to see an audit from Tether. Anyway, around the same time that this new legislation rumor dropped on us, another story broke from China, many interpreted to spell, well, a lot of pain for crypto holders. Chinese authorities have seized $4 billion worth of crypto from a now defunct Eastern Ponzi scheme. The document lists 194,000 Bitcoin, 833,000 Ether, 400 really big numbers, basically. Previous sell-offs of ill-gotten gains have been linked to drops in the price of Bitcoin as supply suddenly spiked. It's not clear how China would dispose of the cryptocurrencies per the report. If they were sold en masse for fiat currency, it could again affect the prices of cryptocurrencies in the seized pool. Really does sound like it's time to panic. The problem with this story is, it seems placed out of time. How have they recently seized assets, yet the funds in question, according to blockchain analysis, haven't moved in over 100 days? How can the government be confident that no one else can access them without moving them? Did they seize it long ago? Do they even really have it? Again, such a piece of non-news that feels like it was somehow saved for the opportune time to use, but it reeks of desperation if it was a planned piece to spook the markets.
I'm sorry, Mom.
So these are the most major occurrences this week that are having or had the most significant impact on price recently. There are others, of course, that are out of the scope of this video, but what can we expect for next year? We've seen a situation exactly like this one twice before. History is no guarantee of future events, but history can rhyme. If we account for lower returns each bull cycle due to the rising economic mass of Bitcoin, if very roughly 2017's bull market was a quarter the size of the 2013 one, then a quarter again in 2021 would see a year-to-date return of around 300%. So around a 50 to 60k Bitcoin. Coincidentally, this would place Bitcoin at around 10% of the market cap of gold, which is an increasingly popular narrative lately. Obviously, it isn't so simple to predict most things, yet alone Bitcoin. Unfortunately, life is a lot more complicated than that, but this maybe provides some insight into what a statistician might say is a pretty reasonable estimation of Bitcoin's potential. Also, if you haven't already, consider checking out channel sponsor Crypto.com. You can pick up an absolutely free crypto debit card using a link below, and a welcome bonus using my link.